In today's environment where mortgage-related investments offer a significant absolute return and relative return versus other credit alternatives, we think there's a place for this type of risk across a variety of portfolios. High-quality opportunities that are going to be resilient, even during periods of economic stress, as well as alternative strategies or higher return strategies where you can take a bit more risk.
The $14 trillion U.S. residential mortgage market is the cornerstone of the fast-growing $20 trillion asset-based finance universe. Asset-based investments, including those backed by mortgages, student loans, and other forms of consumer lending, provide crucial funding across the economy and can offer investors resilient returns and diversification to traditional forms of private credit.
If you don't have a good grasp on the housing market, being that the house is typically the largest asset that most consumers have on their balance sheet, and you don't have a good grasp on the mortgage market, which is obviously the largest liability that many borrowers have on their balance sheet, you can't invest in the mortgage market, you can't invest in consumer credit.
If you know that a household has tremendous equity in their home, you're willing to give them a consumer loan. You're willing to give them a parent co-signed student loan. When you're focusing on mortgages, when you underwrite that risk well, and there's a lot of strongly related investments that offer good yield and diversification opportunities for investors as well.
PIMCO is one of the world's largest investors in the mortgage market, first investing in residential mortgage-backed securities in 1975, and now managing over $300 billion in RMBS AUM. Also a leading investor in private residential loans and sponsor or participant in over 200 securitizations, PIMCO is a trusted partner to mortgage lenders and strategically positioned to bring the best risk-adjusted opportunities in this sector to our clients.
PIMCO has been a leader and a pioneer in the mortgage market, really going back to the 1970s, right? Early investing in agency mortgage-backed securities through the financial crisis, where we're investing in distressed legacy non-agency mortgage-backed securities, and then the rebuilding of the mortgage market post-financial crisis, where we've been a leading investor.
Our advantage comes down to three qualities: our distinct vantage point across public and private markets, our intelligence based on decades of data, and how we put our experience and ecosystem to work for our clients. Our dual market lens allows us to see relative value that others may not. Combined with the access born through our scale and reach, we can be selective across opportunities.
The flexibility of capital that we have at PIMCO has given us a real unique edge in terms of relative value. There's opportunities at the top of the capital structure, investing in investment-grade portions of securitizations. There's opportunities in investing in more illiquid parts of the mortgage market, in mortgage loans, and mortgage servicing rights, in mortgage platforms. And having the ability and the flexibility to navigate across different forms of investments also makes you a better investor over time as well. No opportunities are too small for us, no opportunities are too large for us. It's all about sourcing the right risk at the right price.
We ground this perspective in proprietary models built on billions of data points, gathered over decades of investing in residential mortgages and private credit.
When you have databases spanning multiple decades, consumer credit, other forms of household credit, and mortgage credit, new technology, AI, and other tools allows you to merge data sets like you've never been able to do before. Get a very, very precise understanding of not only mortgages, how much equity is within that respective property, but the overall household's credit profile.
This all then comes to life through our people and our ecosystem. Forged across market cycles, we've built the relationships and resources needed to access favorable lending terms, execute on opportunities, and adeptly navigate even the most challenging market moments.
Myself, you, many other members of the PIMCO team have been involved in these mortgage markets through multiple cycles. We've seen excess develop. We've seen the need and the importance of doing very, very granular analysis with a sense of paranoia around what can even happen from a servicing or a policy perspective. And again, it's embedded in our culture. A lot of history and experience in markets, a lot of deep technology, data analysis, and historical data from being involved and being a leader in this space, we think leads to a very strong client value proposition.